Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Monday the 14th of September. Starting off with Ascent Resources, where there's been a research note on the company, just approaching near-term resistance at 3.5 pence, and end-of-day close above that should be enough to trigger a follow-on move up towards the top of that broadening triangle from back in March, heading as high as 7 pence. That could be seen as soon as the end of next month. Stop loss, at the moment, probably the easiest thing is just to wait or use the 50-day moving average at 2.37 pence on an end-of-day close basis. That makes technical sense at the moment. On to Alba, which I've covered several times here before. What's interesting at the moment is the way that we've got the shares at 0.25 pence and end-of-day close above this level, which is the initial September resistance, should be enough to give us a follow-on move over the next 2 to 4 weeks, as high as that August resistance line projection from last year, heading up to 0.35 pence. And I suppose the support really now back around 0.21, 0.2 at the most, in terms of that being the consolidation level and also resistance on the way down for the shares at in the autumn of last year. Return to form maybe for Clontarf. Here you can see that the shares have broken a near-term triangle. We've had a few false dawns, actually several false dawns in terms of the shares going up and staying up since November, so it's that may be something to watch. But the reason for the renewed optimism this time is really the way that we had the shares in a very slow and low volatility phase, so that normally means that this time when it breaks out it will go up and stay up. Breaking that line of resistance from July around 0.45 essentially means that at least while we're above, I suppose, 0.4, which is September resistance to date, we could head up to 0.8, which is the top of the triangle from April on the daily chart at the moment. So above 0.4 up to as much as 0.8. If you're cautious on the shares, maybe just wait for an end-of-day close, hopefully today above the 50-day moving average and say the 0.5 pence level. Couldn't resist looking at Eve Sleep again, just because when it was at the lower levels, people were saying it was down and out and would never come back. But here we've got this wonderful V-shaped bull flag. We beat the initial target here, 5.5 pence at that top of that rising trend channel from last October. And now, at least while we're above 5.5, looking for as high as 14 pence, which is that resistance line projection from May last year. That does look rather optimistic, but I think that probably given the cynicism towards the rise in the stock, going for a higher target might actually be the squeeze destination for those who have been bearish on the shares. Also pleased that finally we've seen Gunsynd get off the ground as well. I think the original call here was above 0.8. We could go to 1.8 at that time. Obviously it seemed a long way away. The only mishap here, let's say, was just the stock needing a final little flush out back towards 0.8 after spiking up to 1.2 pence last month. But 0.8 has basically been the support area, so not done too badly on that call. Hopefully an end of day close today by 1.2 will deliver 1.8 maybe as soon as the end of this month. And the stop loss really back around the 1 penny level. It'd be surprising now if we see an end of day close back below that particular number. On to Greatland Gold, which has been the gift that's kept on giving. In fact, we've seen the shares hit the top of that rising trend channel I drew recently from February up to 22, 23 pence. End of day close above 23 should be enough to give us a new leg to the upside. That resistance line there from March heading up towards 31 pence, and hopefully with a bit of luck we might see that even as soon as the end of this month, maybe going into the first week of October, but no longer than that. Stop loss at the moment probably 19 pence, which was let's say vaguely the resistance in the last few days on the way up to current levels. Another stock which was doubted by the bears, obviously not realizing that we're in a rampant bull market, is Iconic Labs. Here you can see that we're just trying to break that line of resistance there around 0.17. Would be nice to see an end of day close above that. That could then give us the impetus to head up to the rather ambitious looking target here on the daily chart derived from that May resistance line projection, and that's currently pointing at a 0.05 target. But if you're cautious on the shares, really an end of day close above 0.02, really the event that you're looking for at the moment. And we really want to see the shares remain above, let's say, 0.15 to maintain the momentum on the current rally. Onto a stock which has been requested for many days now. I finally managed to get around to it. Phoenix Copper. Beautiful chart here in the sense that we broke the 200-day moving average in April, and have really been squeezing higher ever since. Most of the consolidation has been sideways, which is what you see in the most bullish of situations. So the sideways shuffle that we've had either side of 40 pence since the end of July, breaking that line, that August line of resistance at 40 pence. Now suggests that while we're above that, looking for a best case scenario target at the top of the rising trend channel I've drawn from March, as high as 80 pence over the next, let's say, I suppose 6 to 8 weeks at the current rate of progress. But one would hope for a steeper rally after this consolidation that we've seen than the previous vertical moves, both in April and then in July. Going on to a stock which has sort of recovered against the odds, let's say, still backed quite well, as you can see, to start this week. Consolidation on either side of that, the top of that November trend channel, so let's call that 0.9 pence. Above that level, looking for a fresh leg higher, heading up towards the November 2018 resistance line projection, currently pointing at 1.4 pence. So ideally, there's not even an end of day close back below a penny, but 0.9 currently the technical stop loss for the shares. Great deal came through today for surface transforms. I think it's many millions over the next few years, and noticed one or two quite smug people already taken their profit on the latest spike. But as far as how high the shares might stretch, but probably looking up to that April 2019 price channel top, currently pointing as high as 64 or maybe even 65 pence over the next few weeks once the shares settle down. Ideally, there's no break back below, I suppose, 37, 38 pence, roughly the 2/3 mark on today's range to date. Best new situation, if we can call it that, of the moment is a company which I haven't looked at that much here, but Starvest. New in terms of just the latest breakout. We've broken through 15 pence, which was the troublesome resistance post-May. The excitement here, I suppose, derived by how much further the shares could head. Looks like the top of a rising trend channel from February, currently pointing at 35 pence. That would be quite a move for the shares if they could achieve that over the next few weeks. But above 15 or 16 pence, up to 35 pence for Starvest. Just a few to go now in this marathon session. Lots of bullish situations around to start the week, which is not always the case. Going on to Scancell, where we hit the 12 pence target that we were looking for, the top of that broadening triangle from December. Next level up, you can see that there's also been resistance cleared from September 2018, but above 14 pence on an end of day close, we could get a fresh leg to the upside, possibly as high as the top of that broadening triangle from way back in 2016, heading for 25 pence, and that could be the 1 month target for the shares. At this stage, only really back below 12 pence kills the idea of a big break, ongoing break to the upside. One of the stocks which has delivered several false dawns and have been rather crushed by a bearish comment has been Tern. But it does look as though here we've got a couple of factors which are helping. The first one is that the shares have already retraced a long way from the 16 pence peak seen at the end of April. The second is that looks like we're going to get an end of day close above the 50-day moving average, which hasn't happened for 2 or 3 months now. That's at 7.57 pence. And if we're really lucky and get a 200-day moving average weekly close this week, 8.4 pence plus, we may finally be on the way to retesting the post-October resistance for the stock up towards the 16 pence area. But I suppose the point to remember here is that almost every tech stock of any description has actually delivered a large rally since March, and Tern is so far the exception. As far as what might delay the upside, probably at this stage really only back below 6.5 pence, and just below the 20-day moving average would really question the idea once again that we're not going to get a rally. Well, we are going to get a rally. Rather, bullish divergence helps the latest move to the upside, and hopefully that will kick in and keep kicking in for the shares. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.